Today I will explain you about rural credit and the sources of rural credit. First of all, let us see what is rural credit. Rural credit is the availability of credit in rural areas. When we talk about these rural areas, majority of the people are very poor and they depend on farming for their livelihood. That is their main occupation. Their land holdings are very small and their produce is just enough for their subsistence. They produce small quantities which is sufficient for their own consumption and they never produce surplus to earn profits. So, we can say that the rural population are very poor and they require credit for every small and big purpose. The two main reasons which force the rural population to go for credit are, one thing is most of the families in India are small and they depend on farming. They are marginal landholders, their land holdings are very small and they produce only for the consumption of their own families. So they never produce surplus production through which they can make money. The second reason is the gestation period between sowing and harvesting is very large. Once they sow the seeds in the farm, they have to wait for 4, 5 or 6 months of time to get the crop sold in the market and to get the money. So we can say the gestation period is also very long. When we talk about sources of rural credit, these sources available for borrowing for the rural people are classified into two types. One is called your institutional sources of credit, other is called non-institutional sources of credit. So all the various sources available are categorized into these two categories. First, let us talk about non-institutional sources of credit. These non-institutional sources are the conventional and old sources of credit. We can say these are the traditional sources of credit, we can say, when this banking system was not developed, when these institutional sources of credit were not developed. These poor people used to go to the landlords or money lenders and to borrow money from them at a very high rate of interest. And the main objective of these landlords or money lenders is just to exploit these poor people. And as these poor people had no other option available, they are compelled to borrow money from these people at a very high rate of interest. So we can say landlords, village traders and money lenders are the three important sources of non-institutional rural credit in India. When we come to institutional sources, the institutional sources include government, cooperatives, commercial banks and the regional rural banks. When we talk about these institutional sources of credit, these sources work on the framed rules and regulations. Their objective is not to exploit the farmers but to help the farmers, to help the rural people in their economic and social development. These institutional sources, they provide credit to the rural population at a low rate of interest and they can pay the amount back according to easy installments fixed by the institutional sources. So, we can say the institutional sources are a great help to the rural population. The main agencies of institutional rural credit in India are, we can say, number one is cooperative credit societies, number two is State Bank of India and other commercial banks, number three is regional rural banks and land development banks, and number four is National Bank for Agricultural and Rural Development, that is NABARD. So these are the major institutional sources working in the rural India for the economic and social development of the people and to help the people in the rural areas.